This is the briefing for Friday, July 31st. Well, for about the last 2 weeks, I've been talking about my displeasure over the market internals. And they even became more exacerbated, I think, in today's trading. You can see this is a 60-minute chart of the spiders, and you can see this is today's trading right through here. This is the open where we had the volatility of looking like their indices were going to sell off, and then of course we got this. The buy the dip guys came in and of course drove it back up, trading just above this 746 area. A little bit different in the Qs. The Qs are lagging some, but you can see that it's really in an area of rotation with an upper extreme at 696 area and a lower extreme at the 663 area. Now, and then looking at the IWM representing the Russell, you can see the volatility that was just going crazy in the Russell. You can see all these selling tails, these buying tails. It was like the Russell had a battle going on between buyers and sellers, and really nobody won. It was just a draw because we just ended up staying in this area of rotation for about 6 or 7 days, as you can see right through there. The key here, this was a pretty good uptrend for the spiders, decent uptrend for the Qs, and just a mess for the Russell. But this is what bothers me. Now, first of all, you can see in the spiders, volume is dropping off. But look at this. Look at this move. This move here from for today's move. Look at this. Bread negative 58 shares in the S&P 500. So this is what's giving me a little bit of heartache in the indices right now, and trying to analyze and come up with a strategic plan and then enter tactically, because this just makes no sense at all. For most of the day, breadth was basically flat. It opened up down in the morning, came back up. It was basically flat for a good part of the day, and then of course closed down. And the same thing is true in the Nasdaq. I mean, if you look at this move here, this is the move that for today's trading. And you can see it was negative 524 shares in the Nasdaq breadth, and negative 286 shares in the Russell. But I mean, there is no trend in the Russell and the IWM. There's just no friggin' trend in this area here. So you can see that we had an initial sell-off. It looked like the Nasdaq wanted to try to trade higher. We sold off, then came back again. Volume really not that great in the Qs. Volume just really very low in the Russell as well. So if we look at the daily chart now, you can see really we're just in this area of rotation and really not going anywhere. Probably the most important aspect is look at volume back through here in the spiders. Look at volume through here in the spiders. It is just extremely low volume, negative 154 shares between the 52-week highs and 52-week lows. And of course, you can see NYSE breadth was negative 214 shares as well. Let me go back here. I want to point out this level here, the 733 area, is certainly going to be the downside support. Trading through that's going to open up trading down to the 720 area. And then I didn't put a trend line here, but you can see that right through here basically is an upper extreme, and that comes in right around the 750, 751 area. Breaking that's going to open up a test of the 760 area. Looking at the Qs, you can see the Qs were in this area of rotation, then a shorter term area of rotation in the middle of this rotational pattern. Then this breakout that occurred last week, and then going into this week. And then of course now trading back above the 684 area with the next upside resistance really from the high of today up to about the 699 area. And then above that, the next level of resistance is going to be the 727 area. Volume down in the Qs, and of course breadth in the Nasdaq negative 524 shares. In the Russell, you can see the Russell has been stronger than the other indices. You can see that just from looking at 3 charts. This area of rotation right through here occurred, and then we get this rotation for probably a better part of a month of rotation right at the upper extreme at this 265 area. I'm sorry, 295 area. And then trading down through to a lower extreme of 297. You can see this area of rotation here with an upper extreme right at the 295 area as well. Tested this twice, 3 times really, today, yesterday, and the day before yesterday. Volume just extremely low in the IWM, but negative breadth also, even though we got this buying tail that came in, at the end of the day today. Now, looking at where we are in terms of overbought and oversold, we're neutral. Neutral in the NYSE, neutral in the Nasdaq. That suggests that the indices can trade either higher or lower on Monday. But notice that the indicator is converging itself. So you can see this is a tightening. This is a tightening within the market. And it suggests the potential for a breakout move or a larger move than we've been seeing in one direction or another. So it's going to be interesting to see what happens. The Nasdaq is really very, very tight, and that's a result of the rotational patterns that we've been looking at for quite some time. Now, looking at total volume, this is total volume in the NYSE. You can see that it was up in today's trading. But look at net volume down, net volume trending down. Even as volume was increasing over the last couple of days, net volume there's been more down volume coming in to the market than up volume. A little bit of a volume surge. I'm not sure why there's so much volume this was right at the end of the day. It is a Friday, it is end of the month. It might have had something to do with option expirations. But once again, you can see the trend in net volume, and the Nasdaq is down. And even though we had this huge volume spike, you can see that net volume was down as well in today's trading. So as I started out, I said that the internals were really giving me a little bit of heartache. I should say heartburn. Because they're really not giving any indication of the next greater degree time and price move. In fact, every time we get to a point where we see a breakout like this, we see the market internals begin to deteriorate, and the same thing happens to the downside. So it's going to take one of two things. One is that either the dip buyers one day on a down move are going to get run over, and that typically will lead to a fairly decent move to the downside. Or the guys who are selling the market when it reaches the upper extremes of these areas are going to get run over to the upside, and then we'll see a pretty big move to the upside. It is really important when you see a trend like this to analyze what's happening from an internal perspective, because that tells you whether the market is strengthening in the direction of the trend or whether it's weakening, especially when you come into a key reference area like this. So keep this in mind going forward. Finally, I want to look at, this is the percentage of stocks above the 20 and 20-day moving average and 50-day moving average in the S&P 500. You can see what's happening here, a lot of deterioration. In terms of the Nasdaq 20-day moving average, look at this. This is pretty significant. Look at the percentage of stocks above the 50-day moving average. This is very significant in the Nasdaq. So there is literally no strength in the Nasdaq in terms of an up move, at least at this point in time. And in terms of the Russell, basically the same thing. You can see the decline in the percentage of stocks above the 20 and decline in the percentage of stocks above the 50-day moving average. Should be a very interesting week next week, but I'm telling you that is the first time we get an indication of a move or a breakout move, such as this was a false breakout, this was a false breakout. The first time we get a breakout move and we see the internals beginning to improve in the direction of that breakout, it's going to be a big move. It's going to be a good move. Have a great weekend. I'll pick this back up on Monday.